Alrighty, so tonight we're going to talk about fundamental and technical analysis. If you guys don't know the difference between the two, well, a fundamental person who does fundamental analysis, some people call them quants. What they look for is they break down either cash balance sheets, they look for dilutive capabilities. They basically look for, okay, on paper, without a stock chart, is this a good company to buy or hold? Um, and I didn't start doing this until about a year and a half ago. And I didn't realize how much you can juice your profits if you actually focused on not only proper setups on the chart, but proper setups when it came to companies that aligned with your bias. So if I'm a short bias trader, I want to find the crappiest company possible to short, right? And technical is the opposite. It's not caring about the fundamentals at all. It's not caring about the health of the company. All that matters is what the stock chart looks like. And this is what most traders are. Most traders are technical traders. They're going to try to tell you, they're going to sell you on a PDF booklet of their favorite candlestick patterns. They're going to send you a bunch of crazy stuff that honestly will make you lose money 10 out of 10 times, because a bare bones candlestick chart, you will honestly, if I had just a candlestick chart, I think it'd be very hard for me to make money. I do. There's so many other things you can do to make so much more money than just a candlestick chart, but it's still important. So I'm going to show you guys how I do both tonight. Now, the fundamentals are the first part I want to go over tonight, because I would say it is easier of the two. And I'll be honest, I don't see this enough on YouTube. I don't see this enough on I just don't see enough traders talking about it. It's kind of crazy how so many people can just overlook fundamentals. Guys, for 4 years, I didn't even do this. So I think it's really important. If you guys are going to take notes at any point tonight, it would be the next 30 minutes, because I think fundamentals are really important. The first thing is the company's cash position. Can you guys hear me all right? We're good? Audio, everything good? Okay. So the company's cash position. The company's cash position means how much cash do they have on hand. You see I got a lot of cash on me right there. I got a couple racks in my hand. And essentially, you want to find companies that have relatively no cash. The less cash they have, the better. In theory, that is the motive behind it. The less cash they have, the better, because you have to understand one thing. As companies are running out of cash, they have to make some pretty harsh decisions. And it's quite, I don't want to say reliable, quite consistent when companies are running out of cash. They look to one thing. How can I get more cash so I can keep going? You guys, you can't operate a company if you don't have any money. So what are you going to do? Well, if you are a company that's publicly traded, you're probably going to sell some of your own stock in order to raise capital. But here's the thing: I'm short bias. So what do you think I want to look for? Do you think I want to find companies that have lots of cash on hand or none? A lot of cash or none? Glenn says none. We got one for none. No cash, Pablo said. John said none. Justin said none. Jody said none. Okay, so the answer is right. The less cash, the better. Because for me, the more the company's backs against the wall they are, the better for me. Because the closer they are to zero, the higher the odds of them having to make some pretty rough decisions for the company. Now, we're going to talk about what is a good cash position to be had. Now, when I talk about fundamental research, guys, I use one website that makes it so unbelievably easy. I am not a paid affiliate. However, I wish I was. But I'm a nice guy, and I said, hey guys, just give all the dollars you were going to give to me, just put it towards the discount of the best discount possible. It's better than Black Friday. If you tell Dilution Tracker that you're a student of Profit Chasers, if you just go here and say, hey Sean, I'm a student of Profit Chasers, then they will give you 50% off in the yearly, which ends up coming out to be like $250 for the year, which guys is a steal for what this provides. I mean, this website makes me so much money. So Dilution Tracker, what I'm looking for is I like to look for the company's cash position. I like to find stocks that have 3 to 6 months of cash, which is okay. Anything above 6 months, I'm not interested. The average. Wait, hold on. I'm going to continue, and then I'll ask a question. And then the ideal is 0 to 3 or even negative. Guys, I saw a company the other day. Still in here? Negative 13 months of cash. Boy, what the? These guys are just crazy company. I have a story about these guys, but it's for a later date. But the point is, you want to find companies that have relatively no cash or negative cash. They are starting to swallow in debt. And here's the thing. What do you think the average amount of cash a company has is? Average. What the? I have it right there. Disregard. Are you kidding me? I didn't realize I put it in the subtext right here. 6 months. So 6 months is the average cash standing. Anything less than that, I'm interested. Anything more than that, it's not really worth my time. The odds of them diluting are less likely. Or even worse, the company actually makes a lot of money, and they not only have a lot of cash on hand, but they make a lot of money. So, number one thing, check the cash on hand. Closer to 0, better. Now, of these two charts, one of them was cash flow positive, and the other one had no cash on hand. What one do you think was cash flow positive, and what one do you think had no cash on hand, and why? This is an advanced question, the second part. Explain the reasoning. Who's got it? Come on, y'all. What do you got? What do you got? Chirp, 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 chirp. We got no one that can answer this. And if you guys didn't know the question, what company do you think of these two stock charts? What one do you think had cash on hand, and what one do you think had no cash on hand? Or what one do you think was cash flow positive, and what one do you think wasn't? So cash flow positive on the right, because the candlesticks are in a positive bias. Glenn, I'm going to give you that one. Left side was going broke. Right side had cash on hand. Mike, I'm going to give that to you. So let me ask you guys this: Why does it matter though? You know, why does it matter if the company has cash or not? Like, what do you think's happening here in this specific moment? Like, why is it going down? What do you think's going on behind the scenes? You pull back the curtain. What's going on? What do you guys think? Lots of selling. Okay, because they suck. Everyone's selling. So the point is, these guys are selling their own. Exactly, Cloud. They're selling shares to fund their operations. Bingo. Ding, 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 ding. That's the answer. So we know that less cash on hand, the better. Now, there's 3 things when it comes to understanding if a company is going to sell their own stock. When I say dilutions or dilutive capability or dilutive potential, what I'm saying here is, what are the odds they sell their own stock? Okay? Because again, as a short bias trader, I want to make sure the more they sell, the more likely they are to sell, the better for me. Now, there's 3 things. 1, can they sell their own stock? Meaning, do they have the correct SEC filings to be able to sell their own stock? Because, guys, not every publicly traded company can just log on to Hammer and click sell. You have to have proper filings in place for the SEC to say, hey, guys, I plan on selling some of my own stock. You have to let your investors know ahead of time. Not necessarily like, hey, I'm selling it right now, but like I have the filings, so I can do it when I want to. Just a FYI. Um, so there's no rug pulls going on. And then two, should they? Meaning, are they in a proper cash position? Because think about it. If your company made a lot of money, let's just say you own Profit Chasers and Profit Chasers stock is doing really well. Let's say business is booming. Why would you want to sell your own stock? Well, the answer is you probably don't. Odds are, if your company is doing really well and you don't need the cash, you're probably not going to sell what you think might be undervalued or what you think is worth a lot. So the point is, do they have the filings? I mean, can they? Should they? And the last one, I don't know, how do I say this? Are they in good standing to? Meaning, are they in the proper position to sell? And I wish there was a word I could just use for that. Um, but what I mean by that is, why would they sell their own stock when it's down? Right? Why not pump your stock price up, get it up to 300%, and then sell? Because think about it. If you're planning on selling $100 million and your company is worth $1 billion, okay? Well, if your company's worth $1 billion and you sell that 100 million, you're getting rid of 10% of your company. But if you pump your stock price up 300% to $3 billion, and then you sell that same 100 million, you're only selling 3% of your company. So why not pump your stock price up? See what I mean? Well, the sad part is this happens like 10 out of 10 times. Companies will force and manipulate their stock price to go up, and I have example after example after example of this just so they can sell their own stock. The sole reason. They don't care about the investors. They could care less. They care about themselves. So number one, should they? Well, should they? You have to look at how much they are up on the day. Ideally, you want to find companies that are up at least 70 to 100% on the day before you consider shorting them if they are dilutive. Will they sell when they're up less? Yes, absolutely. But the big ones that you can take extreme advantage of, ideally you want to see up a few 100%. And let me show you. Did I close out on my hammer? Let me load up my hammer, and I'll show you the one I shorted today and why. Little live login here. Little live login action. Ugh. Any questions so far? While I'm logging in here. I just want to show you one quick thing and why I have the 70 to 100% mark. Oh, yes. Oh, I don't think you can see it. Stupid, Okay. I'm going to change present entire screen here. Here we go. So I just logged into Hammer, and I shorted two stocks. We're going to go over both of them tonight. But SNOA. SNOA was not the worst company in the world. However, they weren't great. The first day, they were only up 50 or 60%. They didn't hit that mark yet. Actually, they closed at 40%. So for me, I didn't want to short them. And then the next day, they ripped up to 130%, being up a total, or ripped up 70%, being up a total of 134%. So the point is, if the stock isn't up enough, then you shouldn't bother shorting it. Because if it's only up 30 or 40%, there's high odds of it running the next day and the next day and the next day. You don't want to be too early. Okay? Pete says it's better to be, what do you say, 50 cents too late than a dollar too early? Meaning, wait, be patient. You want it to run its course. Because you have to understand, long bias people are in control. They're buying it up. They're trying to pump the stock price up. Pump. The more they pump, the better it is going to be when they go to dump. So wait for at least 70 to 100% on the day. Okay? Can you see who's selling stock? We'll get to that in a minute. 70 to 100% on the day on just sheer price. Can we short the opting trading is not available for Can we short if the opting trading is not available for... Techie, what do you mean by that? Like your broker doesn't have shares to let you short? Is that what you're saying? We'll move on. So number 2. Can they? Can we short if yes. Yes. So Techie, majority of the stocks that I short do not have an options chain. In fact, I'd probably say a good 90 to 95% of them don't. I am not shorting puts. I'm doing just shares. I don't do any option contracts. If you ask me about theta and time decay and IV crush and the Greeks and I don't know what any of that means. All I know is like I don't want my position to charge me just by holding it, even if I'm correct. So I do not touch options. Not that I'm an options hater, y'all, but I'm just saying. Okay. Now the next thing is, can they dilute? Do they have the proper filings in place to dilute? Now, I don't want to take 2 hours of your time and go through every single SEC filing and what each and every single one means. However, if you go back to that Dilution Tracker app, so you don't have to read through all of this. Now, in the future, I really want you to know how to read all of this, and I'm going to teach you it. But for tonight's sake, so we can move on and do technical analysis and more fundamental, look at the offering availability. If it's high, that means that there's high odds of them selling. If it's low, thank the Lord this was low. Yes. Offering availability is low, and it's cash flow positive, meaning they don't need to dilute, they don't need to sell their own stock. Well, you probably don't have to short a lot of it. Offering availability low, offering availability high. So these guys, high offering availability, but they don't need the cash. They have 9 months of cash left. They're chilling. You want to find stocks with low cash like this. Yes, Dilution Tracker, you're coming in clutch, bro. JFBR, they have medium offering availability. Let me look through this. Okay. Real quick, what's their stock price at? I would need to see JFBR. Did it pump after hours? Nah. I mean, you need to see the stock move. That stock didn't move. But the point is, you want to see stocks that have not much cash and high offering availability and are up a lot in the day. Because you have to understand one thing about these stocks. They are like rubber bands. How many of you guys have a little brother? Or how many of you guys were the little brother? I was the older brother. How many of you guys had a little brother? Or how many of you guys were younger? Any of you have a brother in here? Younger or older? 2 little brothers? Alright. You have a younger? Alright, Glenn. So let me guess something. When you guys were younger, and I don't know the age difference. Wait, Glenn, aren't you also brothers with, what did we say last night? You were brothers with Danny or something like that for the example I gave for the cards? Were you the one that shystered his Tom Brady card? I can't remember who I used for that example. But the point is, the rubber band analogy. Did any of you guys, as older brothers or younger brothers, take the rubber band and stretch it back onto a part of their body, like their back of their neck, and or their leg, and let go and go, it hits them, it makes a red mark, they start crying to mom, I didn't do anything. Was that anyone in here? Anyone do that little rubber band thing? Or maybe to your buddies in class? Every day and twice on Sunday. There we go. All right. So here's the thing. When they really pissed you off, you give them one of these numbers. Right? One of the big ones that you're pulling back a bow and arrow. And the kid's like, stop, no. But you're holding them down anyway. Yeah, I was the older brother. So point is, Techie, Hammer, we talked about that last night. Hammer lets you short anything. But the point is, the further you pull back, the harder it hurt. Right? Well, it's the same thing for stocks. If they have a lot of dilutive capabilities and they are a bad stock to begin with, when they gap up or when they run, the more they run up, the harder they fall. It's just like the rubber bands. Because they're going to come back down to zero eventually. These companies suck. Guys, a majority of companies being publicly traded make this much money. Actually, if they made this much money, they'd be very happy. They lose a lot of money. And because of that, they sell and sell and sell, and most of their stock charts end up looking like this, where they are down a tremendous amount. We're talking 99.9999%. Absolutely ridiculous. There was a shipping company the other day I saw where they were down a hideous amount. Wait, what's it? MG. Whatever. It doesn't matter. It's one of those tickers. Oh wait, this one? No, wasn't. Okay, moving on. But the point is, the more they're up, the harder they fall. Okay, get the analogy. So we'll talk about all the filings to begin with because it's important to know how to read the SEC filings. And the reason is you want to know when they plan on selling. So for me, on L, I can't remember the ticker. It starts with an L. Late, no. Doesn't matter. Started with an L, and they had what's called warrants at $1.40. So what that meant was I knew that insiders or that investors were going to sell at $1.40. So what do you think I did when the stock ripped all the way up to $1.40? Knowing dang well they're going to sell at that point. Because you have to understand, they are not going to waste an opportunity. If their stock is pumping, they are going to be dumping. A lot of these companies get one shot every year to pump their stock, to collect the investors' money, and to move on. So for you guys, you have to look at, okay, can they sell? Boom. If they can sell, let's consider shorting it. And in this case, I went short at 140, this red line. You can see they barely went any higher, and they flushed down, and they made money on the way down. So there is going to be advantages. There's a little secret there. But I don't have time to talk about tonight because I want to go on to technical analysis. And I told you guys that I wasn't going to take more than an hour of your guys' time. And I'm already running late. All right, let's talk technicals. Before we move on to technicals, what can I answer about the fundamentals? I'm looking for crappy companies to have little cash that made a big move so they can become the rubber band and snap back down to reality. And as they snap, I make money. Okay? Tomorrow, I'm going to show you guys how and when to enter on these stocks and when to figure out when the time is up so you don't get caught up in the choppiness. But tonight, I just want to talk about how to identify if it's a good company or not. Are you scanning through Dilution Tracker to find these crappy companies, Glenn? So for me, like I said, I do not want to even look at it unless it's up at least 70 to 100%. So I just go on Dilution Tracker. I just go on Hammer, and I wait for these companies to come to me. Like you can see I shorted RAY here, which was a good short, made money on it, but was a good fundamental short. No. It was actually a terrible one. I rarely ever skip over the fundamentals, but when I saw this, it was a do or die scenario, which you guys are about to see in the next slide, and I knew I had to short it and make a split-second decision. So I said, hell with it. I shorted it. I made money as it dropped. You can see it fell like a knife. I shorted off of these red triangles, cover down here. And then I looked at its fundamentals just to see if I was, if that was the right call. Bad call. This stock could have tore me up and ripped me in oblivion, and thank the Lord I didn't. But I'm looking for the stocks on my left to get to 70 to 100% to begin with. Because if they're not up that amount, I don't care. I don't care how good of a company or how bad of a company they are. They need to be up to snap back down. I don't want to short them at 0 and hope that it goes to even less. I want them to pump, and then I want to short them back down to 0 to have proper risk to reward. Okay? So we're talking about shorting crap companies, but when do you go for a long bias or unrelated top? So for longs, I look for companies that have a lot of cash on hand, that make a lot of money, and are in certain areas in the world that are easily to be heavily manipulated. We've found stocks from China, Hong Kong, biomedical stocks, therapeutic stocks. These stocks are the ones that get manipulated the hardest. So, like I said, RAY was a really bad example, and I should not have shorted it. Well, let's look at it. To start, they make money, so they don't need to sell any stock. Another thing is they can't sell their own stock. They have no filings, so They can't. They don't need to. And oh, by the way, they're from Hong Kong. Uh-oh. These stocks are known to go ballistic. And I'm just telling you, IPOs, biomedical stocks, biotech stocks, and stocks from China, you got to be careful. I can show a crazy list. This is not drug. Drug wasn't was what was one that was just this was in China and ripped. D as a DNGX. No, DGNX. Yeah, DGNX. They had a lot of cash on hand. They had no offering availability. They were from China, and looky here. Also, they were an IPO, so everything. It went from $3 to $80. Yikes! You could have got tore up on it. So, creating a solid short opportunity soon, but not something you want to be shorting. Scary stuff. Okay. Technicals. So, I am a guy that likes to let data and analytics do the talking. Eye lag, puke emoji. Why don't you like eye lag, Pete? Just kidding. It's a bad joke. Is eye lag from China? Oh, wow. They double dipped on this one. Not just from China. They're from China, Hong Kong. I've never seen both. That's like an extra, just like. All right, moving on. So I like to let data do the talking. I'm a guy that likes to number crunch. I used to be obsessed with it, and then I got married and found a girl, and I'm like, all right, I can't do this all day. Then I had kids. I'm like, I really can't do this all day. So I've done enough to know what the statistics look like. This is a database I have where I would factor the start of the move, why it moved, the price of it, the time it moved, and then I would calculate 5 specific data points for that stock. Per stock, it would probably take me 10 to 15 minutes at least, probably 15, 20, to annotate all of this. And sometimes I'd have 2 or 3 stocks a day, and it would just be brutal. I'd be doing this all day. Just ding, 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 ding. But the point is, I've done enough to know the numbers and know what makes sense and what doesn't. And what I found was, remember when I said yesterday why I like to trade these stocks? Why even trade small cap stocks, guys? What's the point? And you remember? At the end of the day, why even do it? What we talked about last night. Who remembers? Who remembers last night's lesson? Because big boy don't play in these weeds, okay? Big investors. Yep. So I'm trading against humans. Point blank. Period. So for me, if I know there's emotion in trading, and I know there's emotional traders, in fact, most people are, and I know that. Remember the mall analogy? If I said one crazy dude ran out of the mall screaming, he'd be like, that dude's just crackhead. Especially if you live in like a crazy city like the ones around me. But if you see like 100 people run out, you're like, okay, something's going on there. Like, I'm not going to that store. I'm going to run away too. People, unfortunately, are very herd-like. Politics aside, they are very herd-like. So for me, I know that. So shouldn't there be a consistent, somewhat charting pattern to annotate when a stock goes from peak greed to peak fear? How we can gauge that? Well, lucky here, there is. How many of you guys know about this gentleman named Ralph Nelson Elliott? Anyone? I have tons and tons and tons and tons of books on this. I've read, let me just pick a few out. One, I think I lent a couple to my buddies. Two, where's all the books? There you go. So, one's being, here we go. So I have books up to Yin Yang on just this thing. Here's just like 5 I just grabbed real quick. I'm sure I probably have like 10 at this point. I know I haven't read them all, but I've read a fair amount of them. Point is, his theory is the one true way to gauge emotion in the charting. So, what Ralph Nelson Elliott did was he was an accountant, as the old story goes, and he liked to travel. He made decent money, and so he went to South America, but he contracted an illness and no longer could practice accounting, and therefore he had to look to the markets just like we do to make a living. But here's the thing, y'all: he couldn't log on to Hammer and say, let's short something. No, he couldn't. So the point is, he had to do what? He had to annotate and jot every single data point he possibly could from a ticker tape, and I think he dotted 100 years of data of boom, 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 boom in every order field. You think I like numbers? This dude crazy. But over almost 100 years from when he developed this theory, and it's still tried and true. Amazing. It is less true in large cap because there's so much money. Let me say this. It works better when there's more humans and more emotion at play. It works less as good when there's huge corporations and algorithms and things of that nature because there's no emotion there. It only works if there's emotion. Now, before I continue on, I want to let you guys know I have a super sick gift for all you guys tonight who make it to the end. I didn't do this for the last group, but the first gift was Hammer. Second gift, I'm going to give you one tonight, and there's going to be a third and final gift tomorrow night. Every night I'm going to give you guys a gift. You guys stay to the end. So stay to the end. Okay? Quick plug. So what does this mean? Well, he stated that every chart has a specific wave pattern to it. These waves can identify points of greed and points of fear, because those are the only two emotions that move the market. But how do we know when this happens? Well, if you guys traded meme coins, a very emotional place to trade. Anyone do any meme coin stuff? Any meme coins? Anyone? Meme coin here and there? Little Elon Ballsack token? Anything? Yeah, I knew you were in that, Noah. That's like, if you looked at his holdings, his long-term holdings, it's gonna be what, like 60%. So no one did any meme coins. Okay, so I'm talking to some pretty decent people. Okay, so the point is, I'm gonna read something, and how this goes. My whole house depends on Fartboy. Okay. I'm going to read something, and just think about when you were trading meme coins and if any of this resonates with you. Okay, so first wave is the change of trend, and in this wave, majority of people, where you see something pop, go, look at that thing go. I'm not going to get on it. That looks, it's a scam, is what it is. It just had a nice little move to the upside, but it's moving, good for that. Stock crypto. Then it pulls on back, and you're like, ha, knew it. That thing's gonna rug pull. I'm out of here. Thank the Lord I did not touch that meme coin. Whoo, I dodged a bullet. Then it rips again, and you're like, wait, what? It's going again? And just ripped after pulling back, and it didn't rug pull. There was opportunity there. Like, what's going on? And it rips and rips and rips, and then you start to get a little FOMO, like, man, I could have got in on that dip. You start calculating how much you would have made. You would have Elon Ballsack and Fartboy, and oh my gosh, I would have been in a mansion in a hot tub, soaking up with my soulmate. What's that from? Anyone know what that's from? Point is, you start calculating how much money you're making. Then it pulls on back again, and you're like, whew, dodged one more bullet. I almost got emotional and bought that thing. Thank the Lord I didn't. Well, then it rips again, and you're like, holy SHIT, this is going to the moon. I'm in. I'm buying it. This is it. We're going to the moon. I'll see you at the moon. Period. I'm so glad I'm in it now. And then it dumps. And you're like, bro, how I'm gonna have all these opportunities to buy, and go figure, the second I buy, there's someone rug pulling. I remember talking to someone that was a trader that worked construction with me when he found out I got into trading, and he said he literally thought someone was at the other end of his screen watching him trade, and the second he bought, they would force the price the stock lower to take his money. And I'm like, dude, you're delusional. There's millions of people that can see the exact same thing you're doing. They're not just trying to take your money. But he was convinced. And so the point is, when you have a motion, you have a very descriptive wave structure. Now, we're not going to go into the downside tonight, but the upside starts with a 5-wave structure. And there's 3 types, because when I first identified this, I was in college and I started to work with it. But then over the years, I realized there's a few variations to this. And if I ever write Elliott Wave Theory Perfection book, I might write my own one day, because I don't see anyone talking about this. I literally, if there's one thing that I've ever brought to the trading market, it's like, hey, this guy actually created something of his own, didn't just steal it from someone, it would be this. You're not going to find this anywhere else. I found 3 types of potentials that you can break down and you can identify and you can make money on. And I actually sneak peek and showed you guys 2 earlier in the last 2 days, and you guys didn't know it. But we're going to talk about type 1 today, because type 1 is the most common. And I might throw in a type 2 in there. Who knows? We'll see. Because Ben, one of my students, I know he probably doesn't want me showing this, but he's a good sport, and he's killing it in trading. He's 7 for 7 this month, and he's got a little WhatsApp group that I'm in, and a couple guys are in. He shows off his entries. Love it. And his stocks are all type 2 shorts. All type 2 shorts. That's all he does. That's all he does. Type 2, type 2, type 2. And let me see if I could find a message real quick. I'm breaking down his... yeah, I mean, it doesn't matter. But he's a type 2 killer. But tonight, we're going to talk about type 1. Now, type 1 is a traditional 5-wave structure. And if you guys are like, wait, you just showed me that 2 slides ago. It's because I did. But here's it on an actual chart pattern. Look at this. 1, 2, 3, 4, 5. Followed by 3 waves to downside. 1, 2, 3. So remember, new wave. Oh, look at that stock. That's, look at that, scam popping off. Someone's trying to manipulate it. Then it dumps. Oh my goodness. That's going back down to 0. Thank the Lord I missed it. Rips. And you're like, whoa, I should have got in on that. I could have made 100 grand if I bought in down there. Then dumps again, and you're like, thank the Lord, I didn't buy it. And then it bounces again, and you're like, I gotta get in, and then dumps. To the moon. No. Now, before I talk about any more, I want to show you one more trade I took today alone. And why I said I literally had a split second to decide if I want to short it or not before looking at its fundamentals. Because this one, RAY, did that exact same thing today, and I'm glad this happened. I'm glad I got an opportunity like this, a pretty stout one. So we had the first wave. Let me simplify my charts here. We had the first initial wave, okay? Fluke, then it pulls on back. Everyone's like, oh, thank the Lord I missed that pump and dump. I remember that this is the 5-minute time frame. Thank you, Alex. Remember guys thinking like, oh, like in the chat they were talking about it pumping, and then it kind of faded and everyone forgot about it. Then it rips again, takes high a day, and creates a third wave. Well, now people are watching it, and then it pulls on back again, and it starts to rip again. Everyone's like, bye, bye, bye. This is going to go to the moon. Well, that's when I went short and then covered on that monster dip. Now, I don't know what happened to it later in the day, but I had a solid 5-wave structure, and I went short after it. I can show you PSTV, I think I had one today. And it's kind of a muffed setup because it was all in the 5-minute. But you can see 1, 2, 3, 4, 5. And then the drop, which I was trying to short it here, but I really wanted it. Wait, what? Why didn't I short this? Oh, yeah, because I didn't see it till it was like down here. And I said I wanted it up to 168 to short it, and I was being really picky. And so we had a solid 5-wave structure here. This was just today, off the top of my head. But that's it when it comes to type 1. There's 2 other types. This is the most common. I like to see a 5-wave structure, and then at that point, It's kind of game time for shorting. One of my confirmations, which we're going to talk about confirmations tomorrow, because tomorrow is strategy. You might be thinking, like, you just told me a strategy. No, the heck I didn't. Good luck on shorting it now. You guys need to show up tomorrow. Please show up tomorrow, because remember what I told you guys on the first night? I told you a dangerous amount of information. You can make money with it, but if you just leave halfway through and you have no discipline, you can lose all your money doing it. And there's people that do it. So just make sure you show up tomorrow, because there's more confirmations to the strategy. You can see the strategy in the background, the one that turned 2,000 to 150,000 in about 14 months. I'm going to show you guys that one tomorrow. It's going to be an awesome lesson. But the point is, on the technical side, why it's still important is you want to see when peak greed turns into fear. Because at peak greed, it's basically like taking... Anyone watch the little indicator that tells you where the market's at, greed and fear sentiment? Right? There's that little calculator. It's essentially doing that on a smaller scale, where I'm looking at where there's peak greed, so I can go short, and then I cover when there's peak fear. Okay, that's all I'm doing. That's what I'm trying to show you guys. Ideally, do this in the 5-minute time frame. I find 5 minutes by far the best. Yeah, guys. So that is fundamental and technical analysis. One of my key confirmations I wanted to tell you guys. Good timing as my camera overheats. Is look for the volume to fade, meaning buyers stop buying, or even better, buyers start buying and it consolidates. So all those buyers are stuck up there, and as it starts to break down, you're making money short. Okay. Now, I did do this on the last one. I did a little sneak peek. But tonight I'm gonna give you guys a little present here. We can, if you guys want, we're gonna talk about journaling our data and knowing our numbers. We're gonna talk about that tomorrow. It's gonna be a little short segment, but I want to set you guys up a little early on it, because we're onboarding students now. If you guys want a free month trial to try PC Journal, it has live Hammer import, and I can show you that right now. Everyone tonight's gonna get a free month if you're a paying member or not. Everyone's getting a free month. And if you want to have it, you can take it. I'll drop like 15 codes, and I'll show you what it looks like. So we got a little light and dark mode here. Light kind of hurts the eyes, so I'm gonna stay with dark mode. And so first, all you have to do to add your trade is go to Hammer, go to your P&L, go to transactions, copy this, copy, and then go to add trade, broker import, down to Hammer, paste it here, and then import trades. Now I already imported my trade today, and you can see my net percent gain. Made 47% on this short, 32% on this short, 17.5% on this short. I can click on it. I can see the strategy I traded, the notes I had, and then some pictures on it. You can see Ray. I kind of dogged myself why I should have never shorted this, because it had great dilutive capability, or no dilutive capability. But this is what it looks like. It can kind of give you guys a wide range of your numbers. It can show you an overview of your P&L and give you the numbers that you desire, and then a little P&L calendar. The reason why I want to do this tonight as opposed to tomorrow is I would love for you guys to have a little homework. So your homework is, if you guys want a free month, I'm going to give you guys that in about 5 minutes. But I would like for you guys to, if you are trading on Hammer, also it works for demo too, Hammer demo, or whatever broker you're trading, annotate one of your trades and see the numbers that you have. Or tomorrow, if you guys have a journal already, bring your numbers tomorrow, because we're going to talk about that and where your numbers should be and how to optimize them. As traders, I hate it that there's this guru industry that thinks you can just show up, click a few buttons, and then a Lambo is at your doorstep, And next thing you know, you're flying a private jet. That is not what trading's about. There's a system that needs to be in place. There are numbers that need to be had. For example, I was talking to a guy that has a business, and he knows exactly how much he buys the product for, how much it costs to manufacture, and how much it costs to sell it. And that's his profit system. Why would you go and take on the markets if you don't even know your own numbers? How much it costs for you to take a trade? What your average loss looks like? How much your winners are making you? What are your most profitable days? Right? All these numbers need to be had and need to make sense. So the homework for tonight is two things. If you guys want to identify a 5-wave structure, screenshot it and send it to me in Discord. If you guys want to do the technical homework. If you want to do the fundamental homework, go on dilutiontracker.com and you can do the free version. The free version is awesome. And try to find a company that you think I would want to short. Remember, you want to find a stock that's up a decent amount on the week. So find a stock that's moved a fair amount and has somewhat diluted capability, and they have 6 months of cash left. I'm going to use you guys as my scrapers for my watch list. And that's your homework. If you want to do the fundamental or the technical, or if you want to be a KitKat student and do both, that's what I have for you for tomorrow. Tomorrow, we're going to be talking about a KitKat strategy that's going to help you guys make your first dollar trading, or help you guys lose your first dollar trading if you don't stick to the plan. Just got to be real with you. So, with that being said, I'm going to drop the link right now in the code. I gotta create a couple more codes here. But while I'm doing this, what questions do we have? What do we got here? What do we have for what you guys learned tonight? Let's do, there's 25 of us in here. Let's do the first 15 people that do it. Add a little scarcity to it, because I don't know if the first 15 people do it and someone else wants it, we can definitely get you going. Did you say there was a free version of Dilution Tracker? Yes, Carter. If you go to dilutiontracker.com, I rocked the free version for like 3 to 6 months, and then once I started making money, I'm like, I need to have the paid version for a few reasons. It gives you a little bit more data. Will we be getting into the other 2 wave structures? We'll see if we have time tomorrow. I'm right at my 1 hour mark tonight. If I can get the strategy to you guys tomorrow, I can maybe do a little sneak peek on 2 and 3. Could you elaborate on the value? Yes, I can. 1 second. Alex, it used to be all caps code Profit Chasers, but if you just tell them you are a student of Profit Chasers, literally go. It is such a hack. They do this because it is, and I'm not just saying this to toot my own horn, it is the biggest discount you can possibly get, bigger than Black Friday, because I told them, do not give me any money, put it all in the discount. If you just go to support, messages, and say, hey, I am a student of Profit Chasers, send me your email, and they'll give you 50% off, or 45% off. It's a ridiculous amount. It is. They don't want it public because they don't want people finding it because it's such a big discount. Can I elaborate on the volume bit you discussed? Yes, I can. And what I said is, one of my key confirmations is I want to see a decrease in volume before I short. Okay. Trial's almost up. Oh wait, they added a couple day trial. I didn't know that. I like to see a decrease in volume before I go short. Now, neither of the stocks today had. This one did. PSTV did. So you can see that 5-wave structure and then how volume died. That would have been a key confirmation for me to short. For the paid or for the free, Alex? That must be new. Okay, let me get you guys this this code to sign up here. There's the link. Code MM2 because we're on day 2. There's 15 spots. It gives you guys a free month. You guys can cancel at any moment. But if you guys want to auto log hammer, $600 for the annual. Yeah. So if you do the code, it will be like 200 something, I think, or like 300. So TraderView, I have never used. That is the one I've used. Kinfo, I've used TradeZella. And another thing we are adding this week, guys, is we're adding a risk management calculator because risk is very important. So calculating your risk, and it kind of does it for you. So you type in how much you're willing to lose, your max loss, and we're going to get into that tomorrow. And it'll auto-populate where your risk should be and how much you should be risking and how many shares you should be taking. Okay. Cool, guys. I got a couple more minutes here. I'll answer a couple more questions, and then I got a dip. Appreciate you all for showing up. Looks like we had a little bit less attendance than last night, but those guys just don't want to make money like you guys do. Oh, the sheer price, like just the actual price. I want the price of the stock to be up 70 to 100%. Alex said, "Watch Jason's video on dilution." Appreciate you, Alex. That's definitely a good video I did with Pete. It's on YouTube. I break them all down for y'all. I appreciate you. Does everyone have a link to that? John, I can get you a link. I don't know if it's public or private, but I can. If you just DM me on Discord, I could send that to you. I break down pretty much all form of dilution. I think I stole it from my mastermind program. How's it lesson, guys? You get a little value out of it? There's no cheer price. I don't know where. I said sheer, like SH, like just the actual price. There's no cheer price. Just look at the actual price of the stock, and then however much it's up. Look at if it's up 70 to 100%. Okay. All good, man. Hey, no question's a dumb question. It's the only dumb answer. I'm a firm believer in that. Alrighty, guys. I got one or two more questions. What do you got? Don't be afraid to ask them. Like I said, no such thing as a dumb question. Just a dumb answer. You guys are new. I have to understand that. Alrighty, so it looks like we had one code taken already. Nicely done. Nicely done. If you guys want that, make sure you guys sign up for it. Does BitUnix offer demo accounts? I'm going to have to ask Noah. I don't know if they do or not. No, not yet. Okay. Alrighty. Well, I'm going to head out, y'all. Appreciate your time. Make sure you show up tomorrow. Tomorrow's going to be a banger lesson. I'm literally going to teach you guys how to turn $2,000 to $150,000 for free tomorrow. So, guys, only 30 people were here compared to the 100 spots I took. Invite a friend. Bring a friend. Sit next to each other and do a lesson together. It's going to be a banger lesson. And if you thought today's free gift was cool, if you thought yesterday's gift was cool, wait for tomorrow. Tomorrow, if you're going to bring a friend, there's going to be a crazy... I'm going to give a crazy gift to you as a send-off pardoning gift for those of you guys who stick around tomorrow. So make sure you do that. It'll help a lot of people. So if any of your buddies want to get into trading, make sure to get them in. Okay. Appreciate your time. I'll talk to you guys first thing tomorrow night to end the mini mastermind. Peace, team.